There are over 1,800 cryptocurrencies in the world today. Bitcoin was the first one. In its almost 10 years of life, the value of one Bitcoin has risen from $0 to 20,000 US dollars.
I think the current financial system is unsustainable.
If you question whether you can trust a central bank, you're basically questioning whether you can trust democratic institutions.
It's kind of Wild West, anarchy type market.
The problem with the large centralized systems is that they are large.
It looks like everything's working well until it doesn't.
Cryptocurrency is a digital asset that is based on a decentralized system. It is run on a peer-to-peer computer network using blockchain to make and validate transactions. This system is highly secure and does not need the trust of central banks. All of its ledgers or records are open for everyone to see.
One clear advantage of a decentralized financial system is the security advantages. Essentially having an infinite number of ledgers, keeping track of an infinite number of accounts.
It's basically a new type of money or new type of asset, and the users of the network together verify the authenticity of all the ownership and the transfers.
Even though on paper, on a theoretical level, you might draw some comparisons between the two, how much crypto assets resemble money or currencies, but in the grand scheme of things, they are a drop in the ocean.
You cannot freeze someone's Bitcoin account, you cannot stop them from transacting. It's about giving the power to the people so they have the power to own their own money and not banks. So a lot of it is about freedom, basically.
And a peer-to-peer network is a highly decentralized structure. And banks are commercial entities, they're companies. Those are, by definition, highly centralized structures and entities. So that there's just a fundamental incompatibility there.
Rather than having a centralized system where hackers or any other nefarious group could infiltrate a centralized system, the blockchain essentially affords cryptocurrencies the ability to protect data by sharing the security responsibilities amongst all the users.
Blockchain is basically a continuously growing list of records that is needed to operate a cryptocurrency. The blockchain allows transactions to be verified and is the cornerstone of a trustless, decentralized system. It is an open record that can record transactions between two entities. Once the data is recorded, it cannot be altered, and it is visible to everyone. Each block takes about 10 minutes to be created, and holds only a certain amount of data, which is why new blocks are created constantly.
The word comes originally from the Bitcoin white paper. So there was a term chain of blocks. Then people started calling it blockchain. And it's the miners that create the blocks.
Imagine a gold mine. There is only a certain amount of gold in that mine, and it is not going to change. This resembles the cryptocurrency. Miners hack away at that gold by verifying transactions in the blockchain and by creating new blocks into the blockchain. This way, they get a small piece from the gold mine and bring new currency into the system. This is their reward.
You need a certain amount of computer power, processing power, to be able to get the right to create a block. So if you want to manipulate the transactions, you would need a huge amount of mining power to be able to do that. There is no way to make a fake Bitcoin transaction. It's impossible. It's easier to fake a euro bill or a gold bar.
Let's say you had 100 people with accounts and 100 people watching those accounts. So you have to have 100 pairs of eyes looking over these 100 accounts. If I then grow it to 1,000 accounts, I need to some extent, 1,000 eyes looking over these 1,000 accounts. And you can see as this system grows and becomes more complex, that the number of kind of informational checks necessary to maintain the system gets larger and larger.
Blockchain transactions are visible to everybody, so it's a public record. So all the nodes or all the users in the network verify everything, and it's all public knowledge. That's the only way that we know of to make a system where you don't need a certain third party to verify things. So everybody has the ledger, everybody has the bookkeeping.
I don't buy into the idea of a trustless network. To me, if I compare the two, I have democratic institutions on the one side, I have basically unknown people somewhere around the world operating a different system. I don't know, to me the democratic system still sounds more reliable.
There's this quickly growing, already a sizable market in cryptocurrencies, and most of the banks are just ignoring it, even though there would be a huge opportunity.
In my experience, banks see cryptocurrencies as a very marginal phenomenon. I think that there's a lot of different businesses and a lot of different asset classes that banks are looking at as potential future businesses, and this could be one among many, but currently I don't see much activity.
Many banks are just staying out of it because they see it like kind of scary and strange and new. They are kind of too careful. But then again, it's also something the regulators have caused, because in 2008 there was the financial crisis.
So almost everything there completely wiped out.
Down by 4 or 5%.
The Dow traders are standing there watching in amazement.
It was the worst day on Wall Street since the crash of 1987.
Look at the huge gap.
Apple's under pressure. Yahoo down 8.5%.
After that, banking regulation got really tough. So they have huge amount of requirements. They can get penalties, they can even lose their banking license. That's one of the reasons many banks are super careful. They want to protect their banking license and their operation.
Central banks are governed by the parliaments of countries, so they are democratic institutions. If you question whether you can trust a central bank, you're basically questioning whether you can trust democratic institutions.
I think it's possible that at the country level, an individual nation might choose to decentralize their particular currency and take advantage of the blockchain technology.
Many of the banks will eventually realize that they will have to get somehow involved in the actual cryptocurrencies, the public cryptocurrencies like Bitcoin.
Whether a generalist bank, a universal bank, would get involved in that, it's doubtful.
I think it's unlikely that that barring out any sort of large-scale public policy initiative, that cryptocurrency on its own will be able to get to that critical mass where it can sustain an entire economy on its own.
Some governments are doing their own cryptocurrencies. There's been a project in Canada, in Estonia, and in Venezuela as well. There's this Petrocoin. So there's various projects, but I think many of them will be fairly useless and will fail. I would say 99% of those projects.
Everyday consumers need a simple basis. They need a foundation to build their lives on. And if their currency starts jumping up and down in value, it has really, really clear negative consequences on the well-being of those people, and we can see that currently in Venezuela.
Lanzamiento de la criptodivisa El Petro.
Let's turn to Venezuela, though, which has launched its own version of Bitcoin.
It's called a petro, and it's a cryptocurrency backed by the country's vast oil reserves.
Nobody knows how big Venezuela's debt is, really.
Critics say it's a desperate attempt to raise cash.
Some have even joined the Colombian army because they know how to wield a weapon. They just want a paycheck at the moment.
People don't like transitions. If you look at data at the consumer level, at how efficiently consumers went from their respective, say, lira or franc over to the euro during the transition, that was tough economically.
A cryptocurrency or crypto asset is by definition a decentralized asset. And if a government or a bank would do it, it would by definition be a centralized effort. To me, that's the exact opposite of what a crypto asset is. If a bank would do it, it would cease to be a crypto asset. There's nothing wrong with what the network does. It's a peer-to-peer network. Everybody's free to run whatever programs they want on a computer, whether it's a peer-to-peer program or something else. That really doesn't need that much regulation. But what needs regulation is when people start putting their money into the system or getting money out of the system. So to avoid things like terrorist financing or money laundering, basically illegal activity is the things that we want to regulate.
They're seeing it as super risky, even though there's no proof that Bitcoin is used widely for money laundering or terrorist funding. There is no proof of that, but they're seeing it as a huge risk.
It's better for them to stay away from the money, because they would risk breaking regulations that is applied to the bank. One part of that regulation is what we call KYC regulation, so know your customer regulation. It's not enough to say, I traded crypto assets. You have to actually know how you got hold of the assets, whether there was any illegal activity in the chain of transactions, how the money got to you.
Central banks are the monetary institutions that manage a country's currency, money supply, and interest rates. They are the authority that is in charge of the banks in their countries. Central banks can freely introduce more currency into the monetary system of the country they are in charge of.
When you have a big and diverse country like the US or a big and diverse economic zone like the EU, the advantage of the current centralized systems is that it helps facilitate stability, such that if you have grain shortages in one country or one state, that those grain shortages don't dramatically affect the price of gasoline or the price of potatoes in a different country or a different state.
The main reason why centralization is good is because it makes systems function more efficiently. So efficiency is the main reason.
I think the current financial system is unsustainable. I think that a lot of the growth we have is purely based on debt and credit. It's like you can get housing loans too easily, which increases the housing prices. We've had these all different kinds of crises in 2008.
At some point, people realized that that the houses weren't really worth as much as they looked on paper, that these bundles of toxic assets were far riskier and worth far less than they had been valued at, and basically the system reacted.
Now we're going to the next stage, which is a currency crisis, which means that the euro and dollar and so on, they're having really low interest rates, even going to the minus interest rates sometimes. I think that's kind of a sign the system is in deep trouble. If you look at the amount of debt in the world, it's skyrocketing. Of course, as long as the central banks can keep it in control and the governments can control it, everything seems fine, and it's working really well, because with all the freely printed money and all the new loans, and you can actually grow the economy. So it looks like everything's working well until it doesn't.
Yes, there's a lot of debt, historically low interest rates. These are generally warning signs within an economic system. But that said, it doesn't mean that we've crossed any boundaries, that we've reached any sort of critical place. The use of credit in financial systems is largely beneficial because it helps people trade pieces of the pie, and the pie gets bigger as a consequence.
The interest you get nowadays, it's not enough to cover the effect of the inflation. So if you just keep money in the bank account, you're actually losing money. With Bitcoin, it's unlikely to happen in the long term. That's how the system was designed, to store value. Of course, it has volatility, but on the long run, it has stored value actually much better than anyone has even imagined early on. The biggest downside is not very efficient. Bitcoin's blockchain can only currently do approximately like 5 transactions per second, which is not a huge amount. If you use it globally, there's going to be problems. So if there's too much transactions, then only supercomputers can verify stuff, which means that it becomes kind of a centralized system. So that's why there's problems to scale a blockchain, because you have 2 options. You either don't scale or you create a centralized system. So that's the trade-off. You'll get the censorship resistance, you'll get a very robust and secure system, trustless system, but you'll have problems with scaling and efficiency.
So crypto assets are used in illegal activities like money laundering, trading of illegal goods, and so on. And some people's view of crypto assets is based to some extent on that activity. The difficult part with that is that we don't really know for a fact how much of that activity is going on. If we compare the size of all illegal activity and the types of assets that are used, Bitcoin and crypto assets are a small proportion of that. So they're not disrupting or transforming how illegal activity is being conducted. But they still are, one element in that.
The amount of money coming in is not in any way in correlation with how the usage and the technology is actually developing. So it can go up too much. That means it also has the risk to go down a lot.
When you look at the highly speculative market around cryptocurrencies right now, that volatility reflects a lack of trust amongst initial investors. The fact that the price of these currencies are jumping up and down so much indicates that there's a lot of uncertainty about that well-being, the worth of that Bitcoin today versus tomorrow. Making large-scale changes often destabilizes the economy. And when the economy is destabilized, the people who tend to be hurt the most by destabilized economy are the everyday consumer, and particularly those who are the most vulnerable, the poor, the sick, the elderly.
It's a little bit pushing into mainstream, but it's not truly mainstream yet. So the next step is it will go truly mainstream.
I don't think they can grow to such proportions that they would become a major part of the economy or the financial system. I think they will stay in the margins.
Realistically, I imagine there's going to be some amalgamation between some centralized system which has a responsibility to public policy officials, that has a decent amount of transparency at multiple layers of a governmental system. So having the stability of a centralized system and the innovativeness and the efficiency and the security of blockchain technology. I don't think this has to be a battle between 2 sides. And I think moving forward, the most effective route would be to try to identify factors of each system that are best in terms of long-term macroeconomic policy and are the safest for everyday consumers.
If the currencies collapse, banking system collapses and things like that, I think then Bitcoin will actually prove very valuable.
So if the world adopts cryptocurrencies, that's fine, as long as during that implementation we're careful about the consequences of that transition on the average consumer.